Our next speaker will be Carrie Hamaker. Carrie Hamaker is the single family administrator for us here at Alabama Housing, and she joined us in 2018. She has more than 15 years of mortgage lending management experience. Carrie is knowledgeable in all areas of the mortgage industry, including sales, production, operations, and underwriting. A qualified and certified HUD Direct Endorsement Underwriter, she also holds the Staff Appraisal Review designation and has been an active member of the Mortgage Bankers of Association of Alabama.
Thank you, Tony. I want to say, first of all, thank you to all of the presenters that participated in the Homeownership Forum today. It's been great, valuable information specifically about Alabama, which is always a great thing to have available to us. So I'm going to go through a little bit of information about our programs here at Alabama Housing, and then we'll have a Q&A session and do a fun little giveaway. So about AHFA. AHFA's mission is to provide homeowner and rental opportunities for Alabamians. The Alabama Housing Finance Authority is a public corporation and instrumentality of the state of Alabama, created on July 25th, 1980 by the Alabama State Legislature. Through its single-family financing programs, AHFA offers affordable interest rates and down payment assistance, as well as a mortgage credit certificate program. Last year, so our fiscal year of 20, and our fiscal year is from October to October, we served 946 families, and 92.6% of those were first-time home buyers. So by far and away, a large percentage of our families that we work with are first-time home buyers. We impacted 49 of the 67 counties in the state. It is a personal goal of mine to see all of those counties be served and us be effectively making sure that our program is available to all folks in the state of Alabama. And the only way we can do that is obviously through our partnership with realtors and lenders throughout the state who are out there working directly with those families and making them aware of our programs. The average purchase price of a new home that was purchased using our program was $201,000, and the average purchase price of an existing home was $153,305. The average income of our homeowners was $53,724 annually. That's us in a nutshell last year. Some highlights of our programs are we have a first mortgage loan program, and this program, so just a little bit about Alabama Housing, we offer a product and we provide liquidity to the lenders out there that are working with home buyers by having this program that they can sell directly to us. And we don't originate any loans, so we aren't working directly with the home buyer. The lender is doing that, and they're doing that through partnerships with their realtor referral network, and they're offering our programs to the different buyers out there. A lender has to be a participating lender to be eligible to sell us a loan. So it's important that any prospective realtor or home buyer do their research and make sure that the lender that they're working with is able to offer our program. So we have first mortgage loans, which are FHA, and it's a standard FHA loan. So all of the standard FHA credit underwriting guidelines are followed. And we also offer a conventional program, which Jim talked about earlier, which is the Freddie Mac HFA Advantage Mortgage. And your underwriter would follow all of the standard Freddie Mac underwriting guidelines. Now, the difference with the Freddie Mac program is there's basically two subsections of that program. There's the program that is available to borrowers who have an income that is 80% or below of the area median income. And you would use that Freddie Mac income lookup tool that Jim showed earlier to find out if your borrower's income qualified them for the 80% and below. That program actually, number one, has a lower interest rate. Number two, the borrower can have down to a minimum credit score of 640. And they qualify for charter level mortgage insurance, which is the 18% coverage versus 35% coverage. So it's a lower mortgage insurance. They also qualify in a partnership with Freddie Mac. Alabama Housing offers an AIS grant along with that program. So in addition to our down payment assistance, the home buyer, if they're at 80% to 50% of area median income, they receive a 50 basis point of the loan amount grant. And if they're at 50% or below, they receive a 100 basis point grant. Since this program's inception, we have given out at Alabama Housing $165,000 in this AIS grant funding. So that is a grant. The home buyer does not have to pay that back. And it's been a useful resource to home buyers, especially now that you think about how prices are going up. Sellers are less willing to pay or don't have to pay closing costs now. So this is a good program for home buyers to utilize. We also have the Freddie Mac over 80% AMI. So in that program, the interest rate is a little bit higher, and the borrower must have at least a 680 FICO. But it is eligible to be put together with our down payment assistance. Next slide. So let's talk about our down payment assistance. Housing is affordable when the housing of an acceptable minimum standard can be obtained and retained, leaving sufficient income to meet essential non-housing expenditure. As mortgage rates are expected to rise in 2021, and we're already seeing that, affordability is likely to become a bigger challenge this year. The combination of intense demand and low mortgage rates has pushed home prices to levels that are making it difficult to save a down payment. Obviously, as prices go up, the more money you're going to have to save for your down payment, even at the 3% or 3.5% that is required on a conventional or FHA loan for the minimum down payment. This is where down payment assistance is really going to be key and even a bigger player in the future. So our down payment assistance is put together with our first mortgage program, and it's a second mortgage. It's a market rate DPA, so it is not a standalone DPA. They have to get our first mortgage program to utilize our down payment assistance. The rate is at the same interest rate as the first, so whatever interest rate they lock in on the first with us, the second down payment assistance loan is at the same rate. It's a 10-year term, and it's amortized just like a regular loan. The maximum down payment assistance for an FHA is the lesser of 3.5% of the sales price, or $7,500. So when combined with the FHA first mortgage, they're getting all of their minimum required investment of the 3.5% and able to basically get in with 100% loan. On a conventional, it's the lesser of 3% of the sales price, or $7,500. So on the conventional, on the HFA Advantage program, it is a 97% LTV first, and then a 3% second. What I will say is a lot of folks, there's a couple different caveats here. If you have a homeowner or a home buyer that is looking to purchase and they have a down payment, but they are eligible for our conventional loan and they have an income that's 80% or below, they can still save money by doing the Alabama Housing First Mortgage Conventional Freddie Mac program, because they're going to be able to get the charter level MI, so the 18% mortgage insurance. They have no upfront mortgage insurance like they would on an FHA loan. And the mortgage insurance obviously is eligible to be canceled after the house gets to an 80% LTV, whereas with an FHA loan, it's for the entire life of the loan. So you don't have to utilize the down payment assistance program, but you can. Also, they're eligible if they're at 80% or below for the AIS grant. For our step-up program, we have very few overlays. As I said before, you're going to follow your standard underwriting guidelines. Our only overlays are this. Obviously, it's our mission to serve low and moderate income Alabamians. Our qualifying income for the program, so we do have a maximum qualifying income. And when I say qualifying income, what I'm talking about is the income that your underwriter is going to use to qualify the borrower for repayment purposes. So any non-occupying or non-borrowing spouse or adult children in the home, those types of things, that is not income that would be included in what we consider our qualifying compliance income. Our maximum income is $130,600 annually, so that's an annualized amount. On the conventional, obviously for the 80% or below, it's going to be the 80% or below of the area median income. And for those over 80%, again, it would be the $130,600. The FICO, minimum FICO for FHA and conventional 80% AMI or below is 640. And for those that are over 80% AMI and going to go conventional, it's a 680 FICO. Maximum debt to income is 45%. So that's our program in a nutshell. If you have any questions or wanting more information, our business development manager is Kathy James. Tony Lee is our business development specialist and our master of ceremonies here today. And our website is listed below in our phone number. We all have the same phone number here. We have a receptionist that answers the phone. So if you want to talk to one of us, and we would be happy to talk to you if you want to call, just ask for one of us here. One thing I wanted to point out too is Kathy is accredited through the State Realtors Association to be able to offer continuing education classes for credits, and we do that at no charge in partnership with local real estate committees and offices. So if you're interested in hosting one of those classes, please let her know. And Tony also does a lot of training, and hopefully soon we'll be able to offer more trainings in person for anyone that you would like to be able to do lunch and learns, home buyer education, anything like that. We'll be available to do that with you and partner with you on that. All right, Tony, are we ready for Q&A?
I think we are. And if I can find the chat box. We did have one for Tom. We actually had two. One of them said, when you say little bigger or little smaller, how much bigger and smaller in square foot?
Yeah, I mentioned that like 10 or 15% to start with. Like I said, you don't want to get too much bigger or too much smaller because then the difference is going to be too large. If you can't find 10 or 15, maybe go 20, 25, but I definitely wouldn't go more than that. I think that it's possible if you go and look in other competitive market areas, like I mentioned, that you would probably be able to meet the 10 or 15% guidelines, but for sure 20 to 25.
Okay. And then we had one more. It said, how do you appraise land and acres with a property?
With the house, you think that that's what they're talking about with the house?
Yeah, I'm thinking with the house.
Okay. Well, within the appraisal, we have several different approaches to value. We look at the cost approach, which means we look at a depreciated cost of construction, considering the house in its current condition, along with what land is available for sale or have recently sold for right now. And we combine that together for the cost approach. And then we also look at the sales comparison approach, where we look at different properties, and acreage on a property is one of those things that we bracket that I was talking about. So if you have a property with 10 acres, you could bracket that by looking at, maybe sales that have 8 to 12 acres or something like that. It probably wouldn't be smart to use, 20 or 30 acres because the adjustments would be too large. But we just compare like properties to each other. So we would use sales that had similar acreage.
Okay. That's all the questions I see. If anybody else has any questions, they can feel free to put them in the chat box. I'll I'll be glad to let the presenters know. We also are going to have a giveaway.
Tony, this is Carrie. I'm going to ask a few questions real quick.
Okay.
I have a couple that I had prepared for some of the folks and some that came up while I was listening to everyone talk. In this first question, I'm going to ask Stuart. And my question is, Stuart, the numbers that you shared on the month supply are obviously very low. What is considered a normal number of months of supply as far as available listings that we would look for to kind of have like a what we'd call 50-50 buyer-seller market?
Okay, yeah, thank you for that question, Carrie. And so most real estate professionals look at 6 months of supply as the equilibrium point where buyers and sellers have roughly equal bargaining power. So 7 or more months of supply being a buyer's market, and 5 or fewer months of supply, a seller's market. So statewide, we're looking at about 2 months of supply now. So definitely, a strong seller's market at the statewide level.
And I have a question for Blake. I know you mentioned there's a lot of headwind, obviously, that we're all facing, especially home builders in Alabama. And a lot of the issue that we've had, I think even pre-COVID, we've all known that one of the ways to continue to see an increase in affordability is new home construction, more actual units and inventory, and creating more housing is going to be vital to that. But there's a lot of challenges associated with that. One of the things, that was really a big focus even before COVID was the lack of qualified labor. And so it's really interesting and promising to hear that Home Builders Association of Alabama is working to help increase that with trade schools. How are some of the, as far as information on folks that would maybe want some more information on how that program's working, or talk about bringing it to their markets, who would they contact for that?
Yeah, I appreciate it, Carrie. Yeah, we're seeing that need, like you said, and we're actively pursuing those kids to give them a path to success in life. But yeah, if they want to contact me, I can share my contact information, or you can, Carrie, or the Home Builders Association of Alabama, right there next to the Housing Finance Authority. We'd love to come talk to people. I'm the current state president for the Home Builders, so I'm traveling a lot around the state this year and talking to our local associations. I'd be happy to come talk to any association that's interested in workforce type development. So we've got a few programs here in Tuscaloosa that are successful. Huntsville, Mobile, the larger metros have kind of adopted it, Birmingham. But yeah, I'll be happy to come speak with any group and, maybe grab somebody from the Home Builders Association staff and come talk to them about how, what that looks like from a funding, but also like a staffing perspective. So thanks, Carrie.
Yes, thank you. And so the next question is for Tom. And I actually have two questions for you, and one of them hopefully will be kind of lighthearted, but I think about it all the time. And when you were talking earlier, I thought, oh my gosh, I've got to ask him now that I've got an appraiser to ask what he thinks. What do we think of, and I'm not going to use the website's name, I'll use something that rhymes with it. It rhymes with willow. What do we think of those values?
Well, they're about worth what you pay for them, in my mind. And let me explain that. As I was talking earlier about accurate square footage, I think square footage has a lot to do with values that those types of websites have, and I'll explain why. So those types of websites are pretty good at reporting like actual sales prices of properties, because that information is in public records. But then they take that sale price, and a lot of times what they'll do is they'll calculate what the property sold for on a price per square foot basis. So if they use county records, which is typically where they get their square footage information, which can be wrong, and they divide the sale price by the square footage, then they can get a price per square foot that's could be wrong. Then they take those price per square foot and apply it to another property to try to get that estimate. So then you're doubling up on the inaccuracies. So unless there's very good high conformity within a neighborhood, I don't believe that those websites are that accurate. They actually do give, like in the bottom of the website, you can click on some link and it'll tell you how accurate they are in different areas. But yeah, I mean, it's kind of hit or miss, really.
The next question that I had is, in your presentation, you talked about superior quality of construction costing more, and would for a realtor to kind of, discuss with their buyer, are you, would you be willing to pay more if you knew the quality of construction was better? Can you give, and that's something that I think a lot of, especially first-time home buyers, aren't really as aware of. It's one of those things, I don't think they're always as aware of what maintenance costs are going to be on a home, wear and tear, some of the big ticket items that can go out and things like that. What are some of the things or the key elements a buyer should always look for in quality that could be money savers down the road?
When you say money savers, you're probably talking about a property holding its value or whatever. But I think, the higher quality items are probably going to be more durable. Like, for example, hardwoods or, tile floors or something like that is probably going to be more durable than a vinyl or a carpet or something like that. So those are things to consider. I always, then you can think about, how the property's value is going to hold its value as well. And I always tell people that whenever you're looking at the different finishes that you put in the house, you should always look to see what is typical in the neighborhood. And try to stay within maybe a range of that. For example, if most homes in the neighborhood have hardwoods and tile or something like that, it probably wouldn't be wise to have vinyl and carpet, because those might be considered, a lesser quality compared to what's normal in the neighborhood, and that property may appraise and sell for less because of that, because of the difference in quality. So I think it's kind of like a twofold question there, because you got to think about how the materials and the quality of construction is going to help the property hold its value, and then you also have to think about the maintenance that you're talking about too.
Okay, thank you. We have one more question. It looks like it came in from the area, and this is for you, Tom. How can a realtor help the appraiser with information for an accurate appraisal? And this is a good question, because I know when I was a lender and underwriter, that was a question that came up a lot, as far as still being able to maintain, the arm's length that you need to for the integrity of the appraisal itself, and not stepping, over any boundaries, but still, really helping the appraiser with the information they need.
Right. Yeah. This is something that I like to communicate with agents, is that, we can have communication and speak back and forth, but we just can't discuss value. So what I always recommend is that, if an agent has done their homework in pricing a property, they've probably done a CMA, and they've probably gotten their own comparables. They've compiled a list of, a brag sheet, so to speak, that they might provide to a potential buyer that gives the updates that the home has had, and maybe the features that the home has had, and even the features or the positives of the neighborhood. So I always recommend that they share that with the appraiser. I just call it a realtor packet, so to speak, that they can give that information about the upgrades, the features, and that type of thing to the appraiser. They can provide the sales that they used. I don't think it's necessary to talk value. because, the information will speak for itself. But I always, recommend that they share that with the appraiser to help, kind of let the appraiser kind of know where they were coming from when they were pricing the property. Then the appraiser can check out, like maybe the sales that they used to see if that the appraiser can use those sales, because sometimes, like I said before, those comps or those properties may just be sales. They may not be comps. So the appraiser has to qualify those sales to make sure that they're comps, but definitely provide that information to them. I think it's very helpful.